Market update on the second. So Powell was dovish at first, and then he turned into being hawkish. He said something along the lines of, we're nowhere near to pausing, and the market didn't like that at all, and we sold off 2.5%. Does this mean that we're going to go down immediately? I think there's a chance we could come down here to maybe test the lows, maybe in this area too. But I don't see it immediately as a huge sell-off lower like everybody else is talking about. And I see people that are calling this an impulse wave. I don't see that either as an impulse wave. So for those reasons, I'm not totally bearish right now. And let's go over the chart then. We know this is ABC. I'm going to go to the daily time frame. And we are sitting below the 50, but above the 20. And so we're not totally bearish yet. 200, of course, is up here. I think that if we zoom in here on the lower time frames, here is the top right here. I still see this as an expanded flat. So A, B, C down here, A wave, B up here, and then I see this as a C wave. If we go down on the lower time frames, 1 minute time frame, I already got it labeled. We got A, B, C, labeling it X. Y wave comes, breaks into the first wave, so we know this is a corrective wave. So we'd be looking for one more move down, and we got A, B, 1, 2, 3, 4, 5. Broke the low. I don't know if that's the exact bottom. If we take our fib tool, you'll see that it can probably go a little bit farther down to, well, it's pretty much where it went to, 374.40 to 374.10, or the 1.61 fib. Let me zoom out again. The 1.61 fib of the A wave is, we already broke that, I guess. So the 1.61 fib of the X wave is down here at 373.30. So then again, you're looking at the 20-day moving average on the daily time frame is sitting right around 372. 372 basically. So I wouldn't be surprised if maybe we come down here and test the 20 and then bounce again. The 10 crossed the 20, so that's obviously bullish. If we see the 10 cross below the 20, then we're going to be bearish again. And then we got the 50 up here and the 20 up, or the 200-day up here. The most likely scenarios from here, considering this is not an impulsive wave, and I don't see where anybody gets the impulsive wave from, because it would have to start right here. Unless they're seeing this as being A, B, C, and then they're seeing this as a 5-wave move. Again, this is not a 5-wave move because you got 1, 2, and then you can clearly see comes nowhere near to being an impulse move. So this is definitely a corrective move, and for that reason, I think that we've almost hit the bottom on it, and we're going to either see we're either going to go up from here, or we're going to bounce, and then we're going to go down farther. And I think that a good target, let's say we go to 373, a good target would be down here at 364 again, maybe test the June lows, or to get in this area right here. Potentially double bottom, but I don't think it's going to go that far off of this move right here alone. It would have to go A, B, C, pull back, and then go lower. That's possible, but the one thing we do know is this is not an impulsive wave, and so we shouldn't see, based on that, we should not see some crazy move that's going to take it below down to 330, 340 like everybody's talking about. Should not see that. It should be either a corrective move or we bottomed on this move. We hit the 0.38 fib on the retracement, so basically hit it almost. And so that's potentially a B wave as well. So A, B, and we go higher from there. Where would we go from there? We could, if we bottomed here, 375 or 374, potentially could go 26 points higher than this. That would take us to 415 if we go higher. So that's the bull case. The bear case is coming down here to 363, around there, and then that could be the bottom, and then we can go higher after that, or we could bounce and go lower after that. So many different options with the corrective waves. Hard to say which way we go from here, but I would think that they're probably going to try to keep this up until midterms are over, if it falls off a cliff from here. But there's not really any clear indicators right now that are saying that this is going to fall off a cliff anytime soon. The VIX, down here at the very bottom of this Bollinger Band, maybe bounces soon. Let me get rid of this actually. It is below all the moving averages, so that's pretty bearish for it, which is what bulls want to see. This pattern on the daily time frame looks like A, B, so potentially a C wave up here. And remember, I had that as a 5-wave move until we broke down here below 27. I would look for bears, we would look for a move all the way up to probably 40. So up in this range. Bulls are just looking for potentially a bounce and then lower, or it could just drop through the bottom, go straight down if we're going to go higher. I don't think that's going to happen, but it's potential. So this, or we go to a new high. That would probably look something like this, up to 40. And then after that, that would be the bottom. Because this is an ABC move, we'd look for a move down after that. So that's the VIX. That is SPY, and let's look at the dollar. The dollar initially dipped when Powell was speaking, and then it just took off going into the end of the day. Let's look at this pattern now. This should give us a lot of clues. I'm going to get rid of this Bollinger Band again. This will give us a lot of clues. So, the dollar, get rid of all this stuff. Dollar, A, B, C, and then we're moving higher right here. Let's take a look at this move higher. And this move higher is corrective as well. Very corrective move. A, B, C, pretty much. Let's look at the look at that. Nailed the very top of it. A, B, C. So again, the dollar is bearish. I don't care if it went up today, it's bearish. You just got to look at the chart. A, B, C. So I'm going to put A right here. Right here. That's a huge move, by the way. 110 all the way up to 112 while he was speaking. A, B, C. Hits it right on the dot. That's a B wave right there. And just looking at those two, let's now use some lines and so now, if that's the top right there, which I think it's potentially the top at 112.10, we hit the very top at 114.80. So we could potentially see about $2.70 lower than this, take us to 106.85. And let me get rid of these. 106.85 December 5th, maybe. That would be hit the parallel line perfect, 106.85, and that would hit a little bit of support right in there. Looking back, and then that would end the ABC move. And I think we're probably going to get one more move higher than that. That would last long enough. I've talked about on the monthly time frame, we're looking for that fourth wave. That would probably last long enough and go low enough. We'd finally get our red candle for the fourth wave. 106.85 would be the target. Or let me zoom back in here one more time, and it's 106.85 or it's 106.85, 108.39, or 106.45. So those are three targets: the 1.61 fib, the 1.23 fib, and this is basically the symmetrical 106.85 from taking the top to the B wave and then subtracting that from the bottom of the A wave. So the dollar looks bearish to me. The VIX could go either way. Yields, are probably going to be similar to the dollar. Exact same pattern, I'm guessing. And yeah, it's doing the exact same thing. And I already have it drawn here. A, B, and we're looking for, let's say it makes it at 4.13. We're looking for about 20 points lower than this, so about 3.7. Already have it drawn right here, 3.7%. So basically, looking at all this stuff, I'm still bullish on the market, even though he was hawkish today. Right now, looking at the chart, looking at the dollar, looking at yields, looking at the VIX, I'm still bullish on the market. So until something changes, I'm going to stay bullish until I see something that's going to make me think that we're going to go to new lows. So that's pretty much it. I'll put the key takeaways in the description. Let me know what you think in the comments about what Powell said or anything else. And like and subscribe, and I will see you tomorrow with another update.